I'm Deborah Borchardt with your midday market update. Well, stocks are up across the board. We've gotten some jobless claims data in today, and the market liked what they saw. The numbers were coming down. Also, trade gap narrowed, and then we got numbers from companies like Visa that said their transactions had increased. So a lot of this is pointing to things maybe doing a little bit better in the economy. I'm here with Ben Willis from Albert Fried. So it does seem that we have gotten a lot of mixed economic data, but some of these data points are positive in the right direction.
They're below their previous readings for the most part. However, it's still positive. And I think, you've heard the Goldilocks theory about the just right market. We're in the Tina market. There is no alternative. And that's what we're seeing. Today you saw reports that bond investors, or the people running bond funds, have actually chosen to buy equities rather than buy more bonds. So it's a function of money flows coming out of, whether it be bonds, or it appears that they're trying to stay in bonds but they're still buying equities. Money coming out of commodity funds, we've seen a huge outflow there. So here we are, no place else but to buy stocks.
Is there any one particular sector that seems to be doing better? Because for a while there in the beginning of the year, it was the defensive names that were doing so well, and then they started to kind of, start to lose their steam.
Well, I think the defensive names were, again, a function of the safety play, and where traditionally in the average investor wants to dip their toe into the market. What we've been seeing at Albert Fried is a rotations from those that want to have a higher exposure into the technology. There's been some interesting play and money flow into the tech group. So I think they're looking for some value. Advanced micro devices, for one, is a very unusual chart. So we think what we're seeing is if we're going to be in stocks, where do we want to be? And they may have been a play out, so to speak, for the money flowing into the defensive issues. Now let's look for some higher exposure.
Well, as you mentioned on the tech side, tech stocks had not taken part in any of this rally, so it would be welcome relief to see that. Obviously we're seeing that today. Yelp up, Facebook up. Now, some might not call those tech names, but they do kind of fall into that category.
I don't know what else you would call Facebook. It's extraordinary to me that the stock, like I said, I don't pick individual stocks. I'm just looking at them from being a trader, that you can have that kind of growth. But when it falls to the bottom line, there was very little growth on the bottom line. But yet, rah, let's buy it. So
well, and Yelp, when you think about Yelp, it's really just local advertising. But people are going on Yelp to go out to eat, to go shopping, to spend money. And if they're doing well, that means the consumer is looking to spend money.
Right, they're looking to spend less money, but they're looking to spend nonetheless. So it's not great, but it's better than it was. So that's the whole theme of this market.
All right, well, there you have it. We are up so far midday here, and that's mostly because, according to Ben, there's nowhere else to put your money. So that's Ben Willis from Albert Fried, and I'm Deborah Borchardt with The Street.